Hey everybody, Marty Mazzora. This is your Thursday video earlier than usual. This is my one shot today to get it done and get it out to you. Dow's rallying pretty hard this morning, up over 150. As you can see at the top of the screen, S&P is up 15. So folks, we have made it aggressively and decidedly through the all-time high, as you no doubt know. And with a little bit of a pause yesterday, the market continues to move higher. I've talked a lot lately about the breadth, which I think is good. I've mentioned that and some other technical indicators that look better to me for this market in terms of the argument why it should continue to do pretty well, a better argument than I've been able to make in quite some time. So it doesn't mean that we're just going to continue to rise and rise, and of course that never happens. I suspect that we'll have our off days and weeks and months to come. But again, what I've been seeing lately is encouraging. In terms of sentiment, it's actually improving quite dramatically. I just looked at the most watched sentiment indicator. It's quickly gone from the 20s to like 35% bullishness. The average is 38. The neutral view and the bearish views have both begun to drop. So sentiment has gotten better. That's probably a good thing in a sense that, as I suggested, people go from the fear of losing to the fear of losing out in a hurry, and that's essentially what we're seeing here. But I do like to see dissenters. I do like to see folks skeptical about the market because there's this old saying, bull markets climb walls of worry. So I want to see that wall of worry intact. So let me show you from this morning what JP Morgan's Carrie Craig thinks about the stock market.
The response from the central banks, though, is what's really driving markets, or the expected response from Bank of England or the ECB to come later, and even the Bank of Japan. All this extra liquidity that market's pricing in is pushing people in towards equity markets more and more, particularly in the US, and I think that's what's driving them higher right now. We would want to see earnings return out of the US to justify that rise in the markets there, and I think more and more we look at that and say, how much more can we get out of this rally? Certainly can go up a little bit more, but we do question the strength and length of this rally until we do see that earnings momentum start to return.
So Mr. Craig credits the central banks with inspiring people to come rushing to stocks. He doesn't believe the rally can go much higher until we begin to see earnings improve. Ironically, his own bank this morning issued their earnings announcement for the second quarter, and they beat expectations, and the outlook was pretty good going forward. So that has a lot to do with today's big rally, plus the expectation that the Bank of England, while they didn't lower interest rates as expected last night, they did give strong signals that they're going to be instituting some stimulative measures in August, and I think that also has the world feeling better about what's going on across the pond, as they say. Another person this morning that I think we should pay attention to, BlackRock's Larry Fink. BlackRock is the largest asset manager on the planet. As you'll see here, he's a bit bewildered by this big rally in stocks.
My view was, even before this announcement of the Bank of England, this rally, in my mind, is not, I don't think we have enough evidence to justify these levels in the equity market at this moment.
You say because not enough money, because there's too much money coming out of equities?
We're still seeing money coming
out. Too much cash on the sideline?
In the retail side. There's $55 trillion in cash on the sideline. And so so we're going to have to wait and see.
So I find it interesting. Mr. Fink says nobody's buying stocks. We're seeing money come out of the market. And of course, he's using real statistics. And he's skeptical. He doesn't think the market, quote, should be trading this high. Well, the market should be trading wherever traders trade the prices. And I'm not here to defend this rally, by the way. But he did say there is $55 trillion of cash on the sidelines. And we're going to have to see how earnings play out. Well, folks, I'm feeling pretty good about the stock market when there's $55 trillion of cash on the sidelines, and I can identify that folks have been very fearful going into the present situation we find ourselves in. Again, I want to be careful because there is a lot in front of us. We have a U.S. election. We've got Italian banks that have got some real problems that need to be addressed. And the world is not without its issues. We had a great jobs number last week. We had a really good unemployment claims number again this morning. We saw some inflation in an indicator this morning that was unexpected, which would suggest perhaps better things going forward because the world's been afraid of deflation. So I'm basically here to say that even though we're at all-time highs, the getting there had been a slow, nauseating process with a tremendous amount of pessimism going into this current rally. Volume has been a little better. I'd like to see it get a little better yet. I want to see more conviction to the upside. The fact that Mr. Fink said there's so much cash on the sidelines is something that is encouraging. But let me close with this, folks. Whether or not 2016 turns out to be a pretty good year, as the present setup, in my view, suggests it could, in the long-term scheme of things, owning really good companies the world over, and I do continue to feel very good about our non-U.S. exposure. In fact, it's had a very good few days, but I do see, as I've said frequently lately, I do actually see better valuations and more potential in the non-U.S. portion versus the U.S., but I do see a U.S. market that could indeed sustain higher levels going forward for a while. That could change tomorrow with some new information. Of course, I'll bring that to you. And with regard to the non-U.S., I keep promising I've got more for you. There is a project that I put together. It's just a little video where I think, make the case for non-U.S. investing going forward. It's just with all the stuff going on, finding the time to get that finished and to a point where I think it's worthy of your attention. That'll happen in the not too distant future. Anyway, I'll leave it there. Thank you, folks, as always, for watching and listening, and I'll talk to you again very soon.